Good afternoon and happy Sunday. It feels like I haven't done one of these in a minute, to be honest, but it's only been like a few weeks. But yeah, so let me quickly run through what I'm looking at for the coming week. So obviously it's now December. Markets are going to start quieting down a little bit more. Like Christmas break, things will start to wind down a bit more, and really and truly you only have about 2 weeks max, a week and a half of decent trading volume and decent PA to really make the most out of December. So it's definitely going to be one of those months where you don't want to be just taking dumb subpar trades, and then that will probably potentially either blow your account or ruin your entire year. Just take it easy, and it's Christmas coming soon, so just relax. So let's obviously start with DXY. Monthly, we had a monthly close that swept these two monthly buy side areas over here. I'm not going to take too much attention from them simply because we are still obviously in a bullish trend, but I cannot ignore that we have obviously swept these highs here, swept these highs here. These are highs from October and November of last year, and these highs are of April of this year. And obviously, as it's now Christmas, we could be seeing price pulling back. Our dollar has been quite bullish it's been quite bullish for the last 2 months, basically. Yeah, just pure clean action higher. However, personally, we are still bullish. We are trading at this daily sell side, and we're hovering above the 21-day EMA as well. So until I see a few daily candle closures below this daily sell side and below the EMAs, my bullish stance will remain. And a further reason for that is because of the current narrative of the US economy still doing well. So last week we had, I believe it was PCE data. One of the inflation measures anyway was last week, and it came a bit higher than expected. I'm pretty sure that it was PC actually. You know what? Let me actually bring it up so I'm not just waffling and chatting shit. I'm pretty sure it was PC last week. Was it on the Thursday? Yeah, Wednesday. So Wednesday last week we had PC and GDP as well. So US GDP is still holding, unemployment claims still decreasing, and PCE is staying sticky, and the headline number actually increased. So basically, long story short, inflation in the US is still sticky. It's coming down, kind of still sticky, and the economy is still doing well. So basically, with that regard, the narrative of the Fed having a slow pace of rate cuts will maintain. So for me, that is still bullish dollar for now. We can again, of course, still see a pullback lower as the year ends. But for me personally, the trend is still bullish. The fundamentals are still bullish on dollar. There's no need to really look for sells on dollar just yet. So I would rather look for buys for the inversely correlated pairs. So we bring on EU. So EU, clear bearish trend, bearish monthly close, but of course we are sweeping monthly lows. Same inverse in dollar, we can push higher, but we are trading now at daily buy side, and there's also more daily buy side here as well, which aligns with the EMA. So basically what I'm looking for is for EU to take out these highs and run lower. It can run lower from here, but because we are still below this EMA here, and granted there is still a bearish trend, I would prefer to see sells. Again, price may just simply break above, maintain, and then push higher. That's a very viable scenario. It will break through the EMA, changing trend, sweeping of sell side liquidity on the high time frames and run higher. Perfectly fine. However, until that happens, there's no need to preempt that. We're not here to be magical mystic megs to call the market X, Y, and Z. We are here to just play what the market is showing. Right now, it's currently showing bearish, so I'm looking for sells. So again, just simply sweep off these highs over here, confirmation to run lower. It's easy as that. That is all that I'm really looking for on EU. Likewise with GU, same narrative, bullish dollar. So I'm looking for bearish closures. For now, pound is more bullish than euro, so as we're trading at these EMAs already, we could be seeing a break higher. So price could be looking to trade higher in itself. But right now, still trading at daily buy side. Tomorrow, obviously, we'll have the first monthly open, and I will be trading tomorrow, but I want to see how the candles close. So tomorrow daily candle closure will be very important in terms of if we either have a daily close back below into here, or if it maintains above and then the week starts being bullish. So right now it's a waiting game, but my bias, so not to be on the fence, my bias is bearish pound, bearish euro, and bullish dollar based on fundamentals, narrative, and just general TA for now. I'll see how the week develops, but for now, that is my general bias to begin with. Then we'll go into the JPY pairs. So for that, I'll start on JPYX first. So now this is a very clear bullish trend. So we've broken past the EMAs, running higher. We had a bullish monthly close, took out the previous low, so likely price continues to run higher. Very simple, right? So then inversely, GJ again broke past through the EMAs, bearish trend, trading below the EMAs, bearish closures, very bearish weekly closure as well, very bearish monthly engulfing close here as well. So I'm looking for price to somehow do some sort of a pullback before then continue lower to see out those lows. Japan has had some good growth in the economy, and fundamentally the market is pricing in a potential for rate hikes either in December or January. So rate hikes for the yen is bullish for the yen itself, so bearish for the inversely correlated pairs, hence why the yen has been rising like this. Now for UJ, same bias again. We've just closed through the EMAs, bearish trend, bearish weekly close. Monthly has closed this FEG as well on the monthly. So again, this is looking like price wants to start heading lower. As I mentioned, bullish Japanese economy, potential of rate hikes to come from the Bank of Japan. So the inverse assets are now seeing some outflows. So I'm looking again for either two scenarios. So either I'm looking for longs from these lows back to test the EMA and this FEG here. So longs from these lows here potentially to test the EMAs before we continue the trend lower. Or if price does just return higher, then just look for more shorts back towards those lows. So basically I'm bearish GJ and UJ. I could potentially trade some short-term bounces if the setup shows itself, because we are at these key lows already. So I could trade some bounces, but I'll decide on how price behaves as the week progresses. But yeah, fundamentally and based on the charts, bearish GJ UJ, but I could see some potential short-term longs as well should that present itself. And then lastly, but not least, we have gold. Now gold is in a interesting position because obviously we've been bullish gold for some time now based on the risk off environment that we've had, but now obviously with the whole Trump presidency, we had the aggressive sell lower due to the return of a risk on sentiment. So basically more flows are going into risk on assets like crypto, equities, etc. And now a safe haven like gold wasn't really needed much more. But of course we got a bounce due to the political tensions between Middle East, Russia, Ukraine, etc. So we got that rally here. Now we're in a bit of a mid zone. So gold can go either way. So right now we've hovered just past the daily EMA, but we've swept this daily buy side within. Let me actually remove this so it's a bit more clear for you all. So to me here, we formed a inverse FEG on the daily right here, FEG inversed, and we've reacted from it. So 2 scenarios here that I'm looking for. Because we've also swept this weekly sell side over here, and we've maintained inside this range, for me to be bearish, I want to see tomorrow's daily candle close back below these EMAs. So I want the candle to close back down into here, and ideally break this last swing on the 8 hour. So to be bearish, I want to see gold continue lower, break past this 8 hour swing, return, and then we can continue sells lower into there, potentially further in, depending on how fundamentals occur. If not, if we can't break lower and we maintain this region, and then daily candles start closing above the EMAs, so for example, daily candles close above and keep holding here, we could see price one higher again. So right now, gold is either or. It can go either way. The daily candles tomorrow and Tuesday will be very important to see where we do push from, either if we push lower or higher. But for now, I lean and favor bearishness, because still within the EMAs, daily buy side swept, daily IFEG within it as well, reacted from it. So I still favor a pull lower, as there aren't any major tensions like right now. So there was a ceasefire between I think it was Israel and Hezbollah, or someone in the Middle East. There was a ceasefire, hence why price was dropped back below, because again, it's not back to being a risk on environment. There aren't any tensions. So if fundamentally things remain fine and stable, gold has more chance of having more outflows. So I can see price running lower. However, if something does pick up, then we might start rising again. So fundamentals will be quite important to keep an eye on, just to see how the outflows and inflows of gold occur. But for now, I favor and lean towards more bearish downside on gold for now. Cool. Now we jump into crypto. So crypto, obviously, we've seen BTC running just shy of 100k. I was telling my group that I don't think that we're going to revisit the all-time highs once we broke above, and we haven't at all. Looking at the daily EMAs, I don't see a reason for BTC to start breaking lower and running back down towards here. This structure is quite good. It's holding really well. We're bullish in it. We had a very nice monthly close. I do feel like we can see a pullback, probably towards these lows and these lows here potentially, but that's not my base case scenario right now. Base case scenario, I think, is that we run 100k first, early month, sweep the previous month's high, then dip lower again, and then potentially look to continue the trend upwards. That's my main base scenario right now. But the funny thing is, so again, that's the monthly high to sweep and then one lower before going higher again. But the funny thing is, that does not have to happen. We do not need to see BTC sweep highs and pull lower and run up again. This is a bull market. When crypto does bull markets, it doesn't tend to always follow normal price action. If you look at over here, just that 2021 monthly high ran through, high ran through, high ran through, high ran through until we topped off. It's like there's no need to forcibly, should I say, anticipate a pullback if price doesn't give it to you. So don't be forcing shorts just yet. Don't be looking to try and catch at the top just yet. There's no need for it. We are in a bullish trend, a bullish market. We were in this range for fucking how long? From March to October, we were in this range. We are now breaking out. Don't force the shorts. Just let price do what it needs to do, and ideally look to take on some low risk longs. I am looking to take some longs, probably not on Bitcoin, but on other coins. So I was in a say long from down here that ran up into here, like cashed out, good trade. It's in the channel, very nice and clean. So I'm more leaning towards finding leverage trades on certain altcoins, like PIF could be one, etc. But I won't go into much detail for these other coins. But basically with BTC, I do think that we just see higher prices, and then if we then also bring on BTCD, so this is the dominance of BTC towards the market on the monthly. We've had a bearish engulfing close on the monthly of BTCD. So basically, as BTC dominance drops, altcoins rally. So I think that we may see less volume and less larger moves on BTC, but I think it will still slowly trend higher, just slowly trend higher. So it will do its thing, still being bullish. However, altcoins will likely start to rally more aggressively as BTCD has probably topped off. So if we look at the daily here, broken through on the EMAs, broken the swing low as well, bearish closures, we look like it to keep running lower, and if so, altcoins are going to run quite aggressively, as we've seen with Ripple as well. Like Ripple right now has been doing a mad thing. I've been a Ripple like maxi for a while now, so it's great to see that money is being made, no worries at all. But Bitcoin right now, I think we just slowly trend higher whilst the altcoins rally higher aggressively as BTCD starts to drop down as well. So yeah, like with crypto, just don't force any shorts. I know people are going to be still in the mode of being in disbelief and thinking, okay, 100k top, here's the top here. There's no need to try and catch the top. Don't force it. We don't know where the top will be. We don't know how aggressive this can run. We don't know when the pullback will come. All that we do know is we're bullish. The structure is bullish. Dips are getting bought. So if you want to get in and you haven't been in, if you aren't in any crypto coins, I don't know what you've been doing for the past 6 months personally, because when we were down here, you should have been loading up on several coins. But anyways, I digress. Yeah, just don't force it. Look for easy sweeps to take some low leverage longs if you want. Look at some coins to see which one hasn't pumped as much yet. There's many to choose from, but right now, don't force a shorting bias when we're clearly bullish. So yeah, so this week should be interesting. We do have NFP this week as well, as it is of course the first week of the month. We've got NFP on Friday and a lot of economic news for both the US and I believe pound is really speaking. So it's mainly a US themed week. Very important. It's the last month of the year. It's the last first week of the year. PA may be a bit choppy, but we might get some good moves because we do have a lot of red folder news to come. So again, I would say let Monday play out, see what the market is looking to do, see how US ISM comes out. Even though manufacturing isn't as important, it is still a valued factor. Just see how the market plays out on Monday and then try to play the current narrative until Friday and then see how NFP plays out. The US economy is bullish, dollar is bullish for now. See how daily candle closures behave for the week, and then you can continue to execute whatever setup tends to form. So yeah, let's have a good week. Take it easy, no rush. Last month of the year. Be smart with it, manage your risk, don't do anything dumb, and yeah, let's have a decent end to the year.